All right, let's get right into it. For the last couple of years, the entire AI conversation, the whole gold rush, it's been all about one thing: software. But that's changing, and it's changing fast. We are waking up to a much harder, much more physical reality, one that's built on things like concrete, copper, and frankly, a mind-boggling amount of power. So let's dig in and figure out why the real future of AI isn't floating up in the cloud, but is actually anchored firmly to the ground.
You know, this quote really nails it. It gets right to the heart of the matter. We have been completely obsessed with the digital side of AI, the bits and the bytes, the algorithms, and in doing so, we've totally overlooked the atoms, the actual physical infrastructure that makes any of this possible. And that right there is where the real story and the really interesting bottlenecks are starting to show up.
So here's how we're going to break this down. First, we'll look at the cracks that are starting to appear in all that AI software hype. Then, we're going to use a really powerful mental model to pivot our thinking towards the physical world. From there, we'll dive deep into the two most critical bottlenecks that are holding AI back: this looming power crisis and the incredibly strained physical supply chain. And finally, we'll zoom out to see how this new reality is literally redrawing the geopolitical map.
Okay, part one. Let's start with that feeling that I bet a lot of you have had for a little while now, that nagging sense that something about this AI software boom just doesn't quite add up. Well, it turns out you were absolutely right to be skeptical.
I mean, just look at the numbers. They speak for themselves. When more than half of all fund managers say we're in a bubble, and then the CEO of the leading AI company, Sam Altman himself, comes out and admits, yeah, we're probably in a bubble, you really have to start paying attention. I mean, look at OpenAI's valuation. It's just totally disconnected from its actual financials. To justify all the money being poured in, AI companies as a whole would need to generate $2 trillion in annual revenue by 2030. That's 5 times larger than the entire existing software as a service market today. Think about it. Salesforce, Adobe, all of them combined times 5. It's a wild number.
And here's where it gets really fascinating. This slide breaks down the actual mechanics behind some of that hype. Because a lot of the demand we're seeing is, well, it's kind of circular. It's almost manufactured. You have Microsoft giving billions to OpenAI, and then OpenAI turns right around and gives a huge chunk of that money back to Microsoft to pay for cloud services. And boom, Microsoft's Azure revenues look incredible. The same thing happens with NVIDIA. They invest in startups, and what do those startups do? They use that cash to buy NVIDIA's chips. It creates this illusion of a massive organic boom, but under the surface, it's really a closed loop of capital just propping itself up.
And this chart really just puts the whole problem in stark visual terms. For every $4 being poured into building AI infrastructure, we're only seeing about $1 of new revenue coming out the other side. That gap between what's being spent and what's being earned, it's just not sustainable. At some point, investors are going to demand real profits, not just these clever, circular cash flows.
So, okay, if the software story is starting to look a little shaky, where do we look next? Well, this is where we have to move beyond that initial hype and ask a really simple but really profound question.
This right here is the key. First-level thinking says, hey, AI is the future, I should buy AI software stocks. Easy enough. But second-level thinking forces you to go deeper. It asks, okay, if AI is the future, what physically has to happen to make that future real? And then what happens after that? It's all about looking at the second and third order consequences that most people miss. And the answer to that "and then what" question actually has a name. It's called physical capital deepening. It's the boring, unsexy, but absolutely vital build-out of real-world stuff. This is the exact moment the AI revolution pivots from being a story about software to being a story about concrete, steel, copper, and gigantic cooling systems. And this is the bottom line. It's the punchline of this whole section. It doesn't matter which AI model wins in the end. It doesn't matter what the killer app turns out to be. Every single possible future for AI depends entirely on 2 physical, non-negotiable constraints: an almost unimaginable amount of electricity and the specialized hardware needed to turn that electricity into thinking. These are the new fundamentals of the AI race.
So that brings us to the first, and honestly the most severe bottleneck: power. You see, AI doesn't just use a lot of energy, it is creating a demand crisis on a scale that our existing power grids are they're simply not ready for it.
Just take a second and look at this number: 26 gigawatts. That is the planned expansion for just one company, OpenAI. It's a number so massive it almost doesn't mean anything on its own.
So let's put it into context. What is a gigawatt? Well, it's roughly the output of one large nuclear power plant. It's enough electricity to power almost 1 million homes.
So, OpenAI's plan, just for their own software, requires the energy equivalent of bringing 26 brand new nuclear power plants online. That's just absolutely staggering. And hey, this isn't some theoretical problem way off in the future. The biggest players are already taking some pretty extreme measures. Microsoft is actually hiring a director for nuclear energy. Their job? To develop small modular reactors, or SMRs, specifically to power the company's AI ambitions. When a software company starts building its own power plants, that tells you everything you need to know about how serious this power constraint really is.
But here's the massive catch. You can't just snap your fingers and create 26 nuclear plants. The regulatory review process alone can take 5 years. Then construction takes another 5, maybe more if you're lucky. We are talking about a timeline of a decade or more to build the power infrastructure for an industry that moves in cycles of months, not years. And this huge mismatch in timelines, that is the core of the crisis.
Okay, so even if you can generate the power, that's only half the battle. You still have to deliver it, you have to manage the immense heat it creates, and you have to turn it into computation. And this brings us to our second huge bottleneck, the incredibly complex physical supply chain, the picks and shovels that support this whole AI gold rush.
This is where we get into the real nitty-gritty. I mean, everybody talks about NVIDIA, right? But the reality is that there's a whole ecosystem of these indispensable companies behind the scenes. You've got thermal management specialists like Vertiv creating these incredible liquid-to-chip cooling systems. Why? Because today's GPUs run so hot they would literally melt if you tried to cool them with just air. You have networking companies like Arista building the fiber optics to connect thousands of these chips together. You have TSMC's near monopoly on the advanced packaging required to even assemble these things. And then you have the engineering firms like EMCOR that literally pour the concrete for the data centers. A problem in any one of these links can grind the entire AI build-out to a dead stop. So let's just be crystal clear about this. The popular myth is that AI is this clean, digital, almost magical revolution. But the reality is that it's a messy, physical, industrial scale build-out. Its success depends way less on brilliant code and way more on getting construction permits, securing water rights for all that cooling, and navigating local zoning laws. It is fundamentally a business of atoms, not just bits.
And these physical constraints are so huge, so important, that they are now escalating way beyond corporate strategy and into the world of geopolitics. Nations are starting to view controlling their own AI infrastructure as a critical matter of national security.
This is not just a Silicon Valley story anymore. All around the world, nations are desperate to control their own AI destiny, for data sovereignty, for economic power, and for military applications. You've got Saudi Arabia pouring $100 billion into building its own AI ecosystem from scratch. India is positioning itself to be the AI leader for the entire global south. And of course, we're seeing this explicit tech race between the US and China, not just over software models, but over who controls the physical supply chains. This has become a global AI arms race, and the weapons aren't algorithms, they're data centers and power plants.
So this all brings us to the big takeaway. The old way of thinking about this was simple. Just buy an AI ETF and call it a day. But here's the brutal truth. 90% of those funds are just glorified tech trackers. A lot of them have up to 30% of their money in a single stock, like Microsoft. You're basically paying a premium fee for a super saturated trade you probably already own. The new way, the second-level thinking approach, is to look past the obvious names to the enablers. The power utilities, the copper miners, the cooling system manufacturers. The companies that are absolutely indispensable, no matter who wins the software race.
And that leaves us with one final thought to chew on. Today, the clear, undeniable bottleneck is power. But as trillions of dollars get invested to solve that exact problem over the next 5 years, a new constraint is going to pop up. It's inevitable. So if we apply this framework, the real question we should be asking ourselves is, what's going to be the non-obvious, absolutely critical choke point of 2030?